excited to be talking with Brent Green today from Lake Michigan Credit Union about the home buying process. Thanks so much, Brent, for agreeing to talk with me.
Sure, my pleasure.
I think this is going to be really great for everybody. So imagine you are a first-time home buyer and you have gone on Zillow, and I have steered you to my website, and now you find all the houses that you're really excited about seeing. And I mentioned to you, or somebody mentions to you, okay, great. So now we just have to get you pre-approved. So that's why I'm bringing Brent here, so we can talk about what pre-approval means and everything that goes into that. So one of the first things we have to talk about with pre-approval is probably the credit score, right, Brent?
Yeah, as part of that process, I have them apply. One of the very first things I'll do is pull that credit score, pull the credit report in, and there's 3 scores. So you get one from each credit bureau. That's TransUnion, Equifax, and Experian. And those 3 scores, we end up using the middle score, so we get rid of the high and the low. That middle score, depending on what product we're using, so it'll dictate usually which direction I'll go with the file. A lower credit score is typically better going FHA, and a higher credit score will find cheaper pricing in the conventional realm. Doesn't mean that you do a conventional loan or an FHA loan. It's just that's kind of the sense of where I'm going with it. Because each loan product and program has its own strengths and weaknesses when it comes to its pricing and its requirements for down payment.
Sure, that makes sense. So what kind of credit scores should people be aiming for?
Over 700 is great. If you don't have a credit score, the best way to start is to get a credit card, use it for gas. Or a car loan is also a great tool. Once you have a job, that's something that you can generally get. Those will help build that score. 620 is generally a minimum score, although there are some products out there and some lenders who will go lower.
And is it the better your credit score, do you get a better interest rate also?
Yeah, all the way around, everything is cheaper with a better credit score. That score will go up, and it does have a major influence on what price you pay, what interest rate, closing costs, type of loan, all of it.
Yeah, so it's really important.
It's crucial. Yep.
Crucial. So I have a Discover card as one of my credit cards, and right on there I can check and see what my credit score is.
When you see credit scores out there in the wild, let's say on a credit card or your auto loan provider like Ally or GM Financial, they may give you a credit score. Each different lender in those types of consumer groups, credit cards, auto loans, mortgages, have their own scoring model. And the free credit scores that you get online, like from Credit Karma, things like that, they also use their own model. They don't use the mortgage lending model. So that mortgage score is something special. You can get it. It does usually cost money. You could get it from myfico.com. That's myfico.com. That's an Experian company, and they will give you all the different industries credit scores, so you know what everything is, but it's a subscription type service, so you do have to pay for it.
Mm-hmm.
Credit Karma, I don't know if they have any pay credit scores there, but if they do, that's another way to get them. If they don't, if it's free, it's typically what they call a Vantage score, which is a scoring model nobody uses yet. It's new. So
okay.
They give that to consumers. It'll typically come in higher than what a mortgage score will. So
okay, that's good to know.
It's important to know what the mortgage score is.
Got it. Okay, cool. Great. So we have our credit score and we are in the right range. So then you look at work history, right?
I'll look at work history. I'll look at income qualifying. How many debts, what type of debt did they have? The assets that they have, how much are we working with to put down? Where's the money coming from? Source of funds is a big thing. Large deposits into bank accounts is a big thing. So we got to watch all of that and make sure what we're getting into, what challenges are presented with funds that are available and usable within the mortgage transaction.
Okay, okay. So I'm coming from a different field. I used to teach at University of Michigan, Flint,
Okay.
to musicians. I was a music professor there, and so I work with or hope to work with a lot of my former students, maybe as they are getting ready to buy homes, and a lot of them are 1099 workers,
Yep.
so gig workers. Is that going to impact what how you do
It's
this?
Yeah, it's different. So you have different income types. You have your salary, your hourly, your commission, and your self-employed. So, and then there's things like Social Security income, disability income. But when you really get down to it, your rental, I'm sorry, your there's rental income too. Your 1099 employment is self-employment. So they'll file that in their regular return on a Schedule C, which is a sole proprietor type schedule for the tax return to claim the income and write off, what expenses you had, mileage, vehicle expenses, instruments, for example, buying different instruments or what have you. So it comes down to their net income when they're 1099. And that net income then is what I'll use to determine their debt ratio. And that limitation will exist based on that debt ratio of what type of product can we do. So when you're talking about the self-employment, it's 2 years worth of income and tax history. You need to have that stability, and that's generally the rule. It's 2 years.
2 years. Okay, great, good. And so let's see, let's talk about, you'd mentioned cash deposits, and that made me think of down payments. So say your parents want to give you an amazing graduation gift,
Right.
$10,000, can that be toward your down payment? Are there special like limits, or how do down payments from other people work?
So you can do what's called a gift. And a gift is where the person giving the money is certifying that they do not require it to be paid back. And it's got to be documented in a certain fashion. So we will go through that with the borrower. We'll give them what's called a gift letter. It's a form letter that they'll fill out and that the seller and them sign. Then we get the documentation to go with that gift. If the gift has already happened, we have to backtrack and unwind it a little bit to make sure that we get the proper documentation coming from the donor to the recipient. So it's able to be done. It's very common, and there's not really a limit as to how much you can be gifted. There may be some IRS limitations that I would advise people to look at when I'm talking to them about a gift. But as far as limits from a lending approval standpoint, you can give as much as they want. It does have to be a relative. It cannot be a friend or outside party or interested party. There are limitations on interested party. An interested party is like the seller,
like me too, right?
the realtor, yep. The lender. We're all interested parties in the transaction. So there's limitations on what we can do.
Okay, that makes sense. So what about people who've been like squirreling money away in their closets and in their cookie jar and just have this cash around? That's a little problematic too, right?
Correct. That is definitely an issue. You cannot use unbanked funds. So pulling it out of your mattress and going and depositing it into the bank isn't going to solve the problem immediately. It will solve the problem after it's seasoned, and that seasoning is 2 months.
2 months.
So you have to go back 2 months on bank statements, and large deposits within that time frame have to be explained and identified. And if it's a large deposit from home, cash, 10 grand, which happens. I see it all the time. It's not usable funds. So we would deduct that from the usable money.
Wow.
So sources of funds have to be well documented, and the funds have to have been seasoned in a bank account in order for them to really be usable. As you begin the process with someone and they're going to do something like that, that's fine. I just can't use those funds until they're seasoned. So getting ahead of the game with a pre-approval helps people understand what rules, get their game plan together, so to speak, so that they can be successful in getting an approval and closing on a loan.
Yeah, great. Okay, perfect. Okay, one more question about down payments. So can you use your credit card for a down payment?
No, you
No.
cannot borrow unsecured. You cannot borrow unsecured for a down payment. You can borrow against a 401k, liquidate an IRA, or some other financial instrument, so long as I can document it. Sometimes people sell cars, and that's or a piece of machinery or something. If it's titled like a car or a motorcycle or a trailer, if there's a title to it, we can document the sale, and we have to go through getting a bill of sale, copy of the funds from the buyer, and the copy of the title proving they owned it. And I then have to also get it either appraised, or I have to use for a car, like a NADA book that would tell me what that vehicle is worth. It cannot be sold for more than market value, or the funds aren't usable. So there's a way to document that, the sale of assets and whatnot, but you can't use unsecured loans. You can't do a credit card or anything like that.
Okay.
Right. So the short list is 2 years W-2s, tax returns, 1099s. The 2 years of the supporting documents and tax returns are generally gathered as well. You have 30 days worth of pay stubs.
30 days.
And then 2 months worth of bank statements, their identification, and if they own a home, I have to get a mortgage statement and their insurance, if they currently own one, just to make sure they're not in forbearance or having any other issues that I'm not counting the proper debt to income ratio.
So about the down payment side, to go back a little bit here, people hear about the 20%. Do you have to have 20% cash in order to get a loan?
No, not at all. So with the different products, your lowest down payments are either VA or rural development. Both of them are 0. FHA and conventional loans, FHA is at 3.5%. Your conventional loans can go as low as 3%. But again, on conventional side, they may be income restricted. There may be other provisions that would stop you from going that direction. And then the standard conventional is a 5% down. So you've got the option of 0, 3, 3.5, or 5. Those are the lowest down payment products.
So then that brings me to, if someone does do like a 5% down or 3.5% down, probably their wiser parents are behind them going, yes, but you'll have to do mortgage insurance, and that's the end of the world, right? Or not?
Right. Yeah. Everybody thinks it's mortgage insurance is really a bad thing. It's not too expensive anymore, and it really is what enables people to get into a home. So if you have the capability of doing 20% down, that's great. And 20% down is what it takes to get out of PMI altogether. But it's not necessarily the best use of your funds, because it's not that expensive on a monthly basis, and it gives you more flexibility. If it takes every penny you got to get into the house, things can go wrong. You need to have a cushion. You need to have some money back, right? I don't like leaving people broke when they're buying a house. It's just not the way to do it. It gets uncomfortable for them. They've not, especially first time home buyer, they've not been in the situation before, so they have no idea what's coming. It's just home ownership is different than renting, and it's a wonderful thing, and it has responsibilities with it and expenses with it. And if you're not really aware of what's going on, it's bad to be broke when you're going in. So with a new payment like that. So that's what PMI will enable you to do, is put down less, keep more of your own money. It's not that expensive on a monthly payment. And it really enables you to become a homeowner much sooner, and in a way that is responsible, making sure that you can afford that payment, and then making sure you have money left over. You just haven't depleted everything you got.
That's great. So on the different mortgages, some of the loans that PMI will fall away. On other mortgages, it doesn't.
Correct. So conventional loans, PMI will fall away. It takes about 9 years to pay the loan down far enough for that mortgage insurance to disappear, but it can go away. FHA loans with the minimum down payment of 3.5%, it's permanent. It will always stay with it. The FHA loans with 5% down, because sometimes you will do 5% down FHA, those will be removed after about 11 years.
See. So what about interest rates? There's a lot of little blurbs in the news about interest rates are at a historic low. So what does that mean from a practical standpoint for someone who's wanting to get into to buy a house now?
It's huge. So if you took a payment for a house that's 100,000 and you put it up at 4.5% or you put it at 3%, there's a huge gap in that payment. It makes housing so much more affordable. I've seen some ads that are pretty good actually in how they characterize it. They're showing, the higher price of a house that we have today because values have gone up, the demand has gone up at a low interest rate compared to that property being 20, 30 grand less at a higher interest rate. And the payment is still much, much better on the lower interest rate one. So it's important to that affordability for first-time home buyers, especially.
Wow. So I just want to make sure I'm understanding. So you're saying that even though home prices are a little higher right now,
are going to be better.
Wow, than a lower price home.
Yeah, it's much more impactful to have that interest rate lower.
Great. Okay, perfect.
Yeah, so I direct customers to apply online and they can upload most of their documents there. If they're not comfortable with that, they can always come in or I'll meet them at another office. But it takes usually 2 days at most. I can do some same day. It just depends on the complexity of the situation, but it does not take very long. Once they've done the application and give me their documents, it goes really quickly.
Right, because the pre-approval is just the first step, right? So we get the pre-approval, you send that over to the borrower, you send it over to the realtor, you make the offer, but then you're not done, right? As the borrower, you still have to actually apply for the mortgage.
Yeah, so the process breaks down, I'm the loan officer, I'll do the pre-approval, and then from me, it'll go to my assistants, my team, and they'll work through making sure everything's set up properly, getting all the appraisal ordered, title work ordered, all that stuff. And then it goes to a processor. The processor then begins to prepare the loan for underwriting. And an underwriter is going to review all the documentation that the customer gives, and then they're going to set conditions for approval. Those conditions can be minor, like, hey, I'm missing page 4 of your bank statement, or they could be fairly major. Hey, your income is 20 grand less than we thought it was. Our debt ratio is now over 50 and we're ineligible. There's things that can go wrong. So that's why it's important on the front end to get the documentation.
So where the pre-approval can take as short as same day or 2 days, the actual process of getting the mortgage complete and all the way through underwriting, depending on what loan you're in, can take anywhere from 30 to like 45 days, right?
The fastest is probably 2 weeks that you would go from start to finish where you're at the table. That would be moving good. 30 days is very common. Your FHA and your more document heavy type products, those generally are going to be anywhere between 30 and 60 days. And it is all about, what's the complexity of the borrower too? Do we have self-employment? Do we have credit issues to work through? Do we have issues of large deposits to work through, source of funds to work through? Those all add a lot of documentation and can take some time.
Okay, great. So so now we're imagining our first time home buyer. They're so excited and they realize that they want to go get window coverings. They want to go buy shower curtains, all those things. And they go to Bed Bath & Beyond and they say, do you want to open a new credit card and save 10%? Should our new home buyer open that new credit card?
No. Right. So during the process, the things that we'll tell people it's really important is don't make large deposits without talking to us first, so we understand what you're doing and we can plan for it, and don't open new credit. So a credit card that you just opened, I'm going to find out about it because it's gonna get reported to me before we close, and then we got a fire drill trying to prove what's the payment on this, and you don't have a statement yet. So it can cause a major delay, and it can be very complex and complicated to get. And for some, it would be the difference between approval and denial. You can have somebody go out and buy all their furniture or buy a car that you weren't expecting. And all of a sudden, their debt ratio is too high.
Oh my
So
God.
yeah, we tell people don't buy.
Okay, so for our last question, what would you say is the number one misconception that first-time home buyers have about the mortgage process?
Boy, there's a lot. There's several. So a lot of them have a misconception on their credit score. They've gone out to get the free ones, and the free ones are not accurate. So they're surprised when they get the real scores. A lot of them think you have to have too much money down, and the understanding to source everything is really difficult. That's when you're asking for bank statements. Nobody knows what a bank statement is anymore, right? You've got a constant feed in your mobile app, or if you go online. They don't mail statements very often anymore. So most people are like, bank statement, where do I even get that? And you can do that online through the portal of any bank has to have your actual statement available to you. That's part of the law. So they've got statements, they just don't know it. And that's a big thing. It's the amount of documentation. It is sometimes very surprising, and people are like, wow, you gotta be kidding me. You guys want to know everything? And it's like, well, yeah, sorry. It's just the way it goes.
Mm.
But yeah, those are some of the things that are probably most people aren't aware of. It's just how in depth the mortgage gets.
Great. Okay, those are three really great things then.
Yeah.
And with all of the different places, because there are a lot of places that can offer mortgages to people. What makes Lake Michigan Credit Union a good place to go?
Sure. Well, I've been doing this since 1993, so just about 28 years. Coming up, actually, I'm over almost 29 years. So it's that experience that you look for in a person that's doing your loan. Not that a rookie loan officer is necessarily a bad thing. Y'all got to start somewhere, right? But to know the pitfalls and all of the issues that can come up, it's good to deal with somebody that's experienced. In addition to that, when you talk about companies and how do they work, we're a credit union. Credit unions are owned by the members of the credit union. Banks are generally held either privately by the owner of the bank, the chairman of the board type of thing, or they're publicly traded, meaning that not only do they have depositors, but they have stockholders, and their responsibility is to those stockholders. So what you find at a credit union is generally better pricing because our stockholders are our members, and we return to the member with better rates, lower costs, things of that nature.
Awesome. Okay, great. I really appreciate this. I think this is great. Brent and his team just helped one of my buyers just get into a great condo, and they were so helpful. There were lots of questions along the way, and they were really accessible, and I always had the answer. So yeah. That was excellent. I really appreciated that. So Thanks for this chat. I'm sure it's going to help a lot of people, and I will put your information here on a card at the end. And if people want to reach out, they will have your information.
Yeah. Awesome. Thank you for having me. I appreciate it.
Oh, you're welcome. Thank you so much. Have a good day.
Let me sing you a song about the things that